What's going on? I am the financial conspirator, your guide for everything financials and conspiracies. Today we're going to be talking about Bitcoin, inflation, and capitalism. How the working class is trapped and how Bitcoin offers an escape. The problem: capitalism and exploitation. Capitalism is based on profit maximization and worker exploitation. Workers are forced to produce more value than they are paid. This is called surplus value extraction. Wealth accumulates into the hands of the ruling class, or the ones who own the means of production. What is inflation? Inflation is when corporations or governments print dollars out of thin air, devaluing what you work for every day. It is the decline of purchasing power over time. And who benefits? Governments and corporations, because they own assets and the money printer, while workers get nothing but wages. You trade time, effort, and energy for pieces of paper that can be printed out of thin air. Time that could be spent with your family, your loved ones, doing things that you actually enjoy. All this time and effort is spent on something that can be printed from nothing.
So I call it magic money computer, any computer which can just make money out of thin air. That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions in payments?
They're mostly at Treasury. There's some at HHS, there's one or two at State, there's some at DOD. I think we found now 14 magic money computers.
14, okay.
They just send money out of nothing.
To the person who is about to grab their car keys and go to the ATM and take out $3,000, you say what?
You don't need to. Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
To the person who...
There's an infinite amount of cash. Infinite. So what happened in 1971? In 1971, the U.S. abandoned the gold standard, allowing unlimited money printing. Fiat currency became purely backed by governments, leading to rapid inflation. Wages stopped growing in proportion to productivity, and the working class suffered as purchasing power declined drastically. You will find a common theme. The working class will continue to be exploited throughout this presentation.
By removing the link between gold and the US dollar, President Nixon created a system where all currencies were backed by nothing. This is what is known as a fiat currency.
Fiat currency is currency that's backed by nothing except government promises. The word fiat is a Latin word, and it basically means currency that's circulating by force. If people have confidence in that currency, and if there's enough government force, that will enable the currency to circulate for a period of time until people lose confidence in the currency.
There is no nation on this planet that currently uses money. We all use currency. There will come a day when everybody knows the difference.
Money is a medium of exchange, and the way it has evolved is that it's always something of intrinsic value until the modern age, when the politicians say, well, we don't need anything of intrinsic value anymore. All we need is political decree. We can say this is money, this piece of paper is money. Now money has a new characteristic. But underneath it all, there's this same concept in place that nobody ever seems to challenge, and that is that governments have a right to declare something of no value to be money, and you must accept it. That's really the problem, and it's still the problem today. It's destroying the economies of the world.
With currencies no longer backed by anything real or tangible, their value was measured only in relation to each other. And because countries with relatively weak currencies can make products cheaply, countries devalue their own currencies to make them desirable trading partners.
every paper currency measures itself against the dollar. So if the dollar goes down, the other central banks respond to that, and they try and intervene in the foreign exchange markets to ensure that the impact doesn't hit their domestic economies.
What is a Ponzi scheme? A Ponzi scheme is a fraudulent investment scheme that promises high returns for investors with little or no risk. Sounds too good to be true, right? That's because it is. In a legitimate investment scheme, the money invested is used to build wealth, typically through low-risk ventures like stock or real estate portfolios. Over time, this generates enough income to pay the investor back their initial investment plus some profit. A Ponzi scheme, on the other hand, promises massive returns quickly. How does it accomplish this? Instead of using the money invested to build wealth, a Ponzi scheme simply brings in more investors to pay off the previous investors. And because these new investors have also been promised large returns, the scheme must then find an even bigger group of investors to pay them off. All the while, the creators of the scheme are skimming cash from each group of investors. Because a Ponzi scheme doesn't generate any wealth itself, it must constantly bring in larger and larger groups of investors to keep functioning. Eventually, no more new investors can be found, or large numbers of previous investors all cash out at the same time, and the scheme collapses in on itself. By this time, the perpetrators of the scheme have siphoned off tremendous amounts of money for themselves, while the investors are left out of pocket and out of luck. Without a fixed link to gold, the U.S. Treasury has been able to borrow and spend as much money as it wanted. When the U.S. government needs money, it takes out a loan with the Federal Reserve. The Federal Reserve prints the currency required for the loan, and in return receives an IOU from the U.S. Treasury. These IOUs are called government bonds. With the money provided from these loans, or bonds, the U.S. government pays its bills and obligations. Meanwhile, the U.S. Treasury and the Federal Reserve work closely together to sell these bonds at auction, where foreign central banks, pension funds, and even individuals buy these U.S. government loans. And why wouldn't they? Loaning money to the U.S. government is virtually a risk-free investment. But if the loans are spent on bills and paying off previous loans, where does the government get the money to pay back the current loan and the interest that is charged on it? Is investing in a U.S. government bond simply one small part in a giant Ponzi scheme?
The Federal Reserve System is definitely a Ponzi scheme. There's no question about it. They go through the appearance of lending money to the governments, and the governments agree to pay back the money plus interest. And so this money comes into being. They create it just for that purpose. They give it to the governments. Didn't exist before that, you understand. Central banks just make it out of nothing and click a few keys on a keyboard of a computer, and the Treasury of the United States government now has another $1 trillion that it can spend. That's where that money came from. And so that creates a liability on the part of the federal government to pay it back, plus interest. Now think about that, plus interest. Well, when it comes time to pay it back plus the interest, they can't pay it back, and they certainly can't pay it back plus interest too. So what they do is they borrow more to cover the original loan plus the interest, and then by that time Congress wants more money anyway. So the debt just keeps going up and up and up and up.
Under the current monetary system, we borrow all of our currency into existence, and we promise to pay it back plus interest. If you borrow the very first dollar into existence, and that's the only dollar that exists on the planet, but you promise to pay it back plus another dollar's worth of interest, where do you get the second dollar? The answer is you have to borrow that. It's a Ponzi scheme because you can never pay it off. It always requires that we go deeper into debt.
Since 1971, the United States has been running trade deficits with the rest of the world, meaning we've been buying a lot more products from the rest of the world than they have been buying from us. The Japanese and Koreans sell us cars and electronics. The Middle East sells us oil. And the Chinese sell us seemingly everything on our Walmart shelves. The U.S. pays for these products with U.S. dollars, and everyone is happy. But if countries were to convert these U.S. dollar profits back into their own currencies, their currencies would rise in value, making their economies less desirable to trade with. Instead, countries invest their dollar profits by buying U.S. government bonds. So countries around the world sell their goods to the U.S. in exchange for U.S. dollars, which have been borrowed through the Federal Reserve, creating IOUs. And countries then loan their U.S. dollar profits back to the U.S. by buying more IOUs. The money from these loans is spent on paying government expenses, as well as paying back previous IOUs. But in order to do this, larger and larger loans must be made in order to pay back the principal and the interest. By paying back old loans with new and larger loans, it would appear as if the entire world has been investing their hard-earned money into a Ponzi scheme of epic proportions.
And a point I'd like to reiterate. If you borrow the first dollar into existence and promise to pay it back plus another dollar, where do you get the other dollar? So, in capitalism, you are supposed to be living paycheck to paycheck, struggling, and in debt. It is a debt-based system. Someone is supposed to lose. There is a class that is meant to be exploited. Capitalism is not failing. This is how it's supposed to work. Credit card companies depend on people to not pay. If you pay on time, you're called a deadbeat. Google these things. And the myth of working harder. The working class is told that they need to work harder to combat their economic struggles. However, wages, as previously shown, rarely rise in proportion to inflation. As productivity increases, wages stay the same. We work harder, and because we don't own the means of production, we don't get the fruits of our labor. And it's a story as old as time. Way back, 1905, none want to work for wages. 1937, nobody wants to work anymore. 1940, nobody wants to work anymore. 1979, nobody wants to work anymore. You can see the trend. It's the same blatant lie. We would like to work for livable wages. Why traditional money fails the working class. Central banks control the money supply. Governments manipulate currencies to serve corporate interests. Fiat money is inflationary by design. Capitalism is not broken. This is not crony capitalism. This is capitalism in all its glory.
Of creating money for federal governments and national governments around the world, if they didn't keep creating new money in larger and larger amounts, the whole thing would crash, because that's where the money comes from to pay off the previous loans. It's the new loans. So that's why it's a Ponzi scheme. It's a classic Ponzi scheme.
In order for the U.S. economy to function, we have to borrow more and more money from the rest of the world. And the more money they loan us today, the more money they have to loan us in the future. And if they ever stop loaning, the whole thing collapses and we can't pay them back.
Every Friday night, Julia's job is to compare the grocery prices of our neighborhood stores for Saturday morning shopping. There are 5 big neighborhood markets within a couple of blocks of our house, and Julia spreads her shopping around, going where the prices are lowest and the quality best.
Remember when a chocolate bar cost a quarter? When you could fill your car up for $5 and feed a family of 6 for $35 a week? Whatever happened to those days? Without anything tangible backing currencies, governments could borrow and print as much currency as it wanted. This has gradually led to the value of our currency being eroded.
With the creation of all this money, that dilutes the value of all of the dollars that were out there before, so that the purchasing power of the dollar gets crowded down. And we used to be able to buy a gallon of gas for 31 cents. Now it's hitting around $5.
The average guy in the street is affected by inflation because of the loss of purchasing power. And as a consequence, his standard of living is declining if he can't keep up with the inflation rate.
In many measures of a standard of living, Americans today are actually worse off. You can take my grandparents. My grandmother never worked, despite the fact that my grandfather was a carpenter. And they had 8 children. Could a carpenter, somebody without even a high school diploma, just working in a blue-collar job, support a wife and 8 kids today? Not a chance.
And why is Bitcoin an alternative? It is decentralized. No government or corporation controls it. It is deflationary. A limited supply, 21 million Bitcoin, forever hard capped. Coins are being lost. Coins are being accumulated, never to be sold again. Borderless and censorship resistance. Bitcoin cannot be seized or restricted by governments. Now I know Bitcoin on exchanges can be seized, but Bitcoin locked away in a cold storage cannot be seized. Non-KYC Bitcoin locked away in a cold card wallet cannot be seized. And Bitcoin empowers individuals. It acts as a digital gold to store value outside of capitalist control. Bitcoin versus the capitalist inflation trap. Central banks control fiat, the 1%, the bourgeoisie, versus Bitcoin, controlled by the people, a peer-to-peer monetary system. The fiat supply is unlimited. The money printer never turns off. Versus Bitcoin, a 21 million hard stop. Who benefits from the money printer? The 1%, obviously. And who benefits from Bitcoin? The people, the miners, the long-term accumulators, anyone who is willing to trade their worthless fiat to speculate. And worker protection, fiat is losing value every year as Bitcoin protects and stores value. Bitcoin is not just an asset, but it is a tool for resistance. It is the peaceful revolution. By adopting Bitcoin, workers can protect their wealth from inflation. True liberation comes not only from financial autonomy, but from challenging the capitalist system itself. The goal is to create a system that serves the people, not just the elite. It's been the Financial Conspirator. None of this is financial advice. If you think I'm just another crazy tanky, leave a comment, dislike the video, but still subscribe. I'll see you guys next time.